Hello everyone, welcome to the ichimokocharts.com daily analysis for the Aussie dollar US dollar FX for Tuesday, May the 29th, 2012. Well, a continuation of the trend to the upside today, and the candle that we're analysing is the second last candle on this chart. The last candle here is still currently developing and hasn't been finalised yet, but certainly looks like a very bearish candle with a potential change of trend to the downside. But there is a possibility that that might not happen. We could see the market trade up, so we can't finalise our analysis of that candle until trading has finished. But we're examining this candle here, the second last, and we had the market in an uptrend and continuation of that trend today with a candle that's made a higher high and a higher low. But a spinning top type candle, almost a doji type candle, and a candle that warns of indecision in the market. So we've seen the market rally on an indecisive candle where the buyers have lost all of their commitment to taking this market higher. The previous day's trading, the market traded substantially above the previous trading, and we had a good extension of the range above that level with the buyers attempting to take control, but they did lose commitment at the 98.59 level of previous support, now holding as resistance for this market, failed to close above there, so a very important level. Today we had the market rejected from above there again, and we failed to close above there with this indecisive candle. The indecision in the market means that even though the buyers have failed to take control of this market and they lost commitment, the sellers also failed to take control and they lost commitment. So that does warn of a potential change of trend, and today it looks like we are seeing that change of trend occur. The current candle as it's developing has a lower high and a lower low, a very large black bodied candle at the moment, so it looks like it could be confirming that potential for a change of trend from that previous day's candle. Now if this market does continue trending down, there is some good solid support down around the 96.62 level, and some support extending from around the 97.50 level where we saw upside price rejection in these previous three candles, where the sellers attempted to sell down to this region and buying came in substantially on that third candle there. So that is an area that we do need to watch, extending from roughly 97.55 down to about 96.62, which was the previous level. If the market does rally, however, obviously 98.59, where we failed to close above for the previous two trading days, is important, and above there we do have resistance extending from roughly 99 up to the round number $1, so with some solid resistance above. In terms of the previous Fibonacci extension, and what we were looking at previously was the relationship of the current upswing that the market was in, this first time frame uptrend, to the previous time the market was trending up, and we saw rejection from the 161.8% level at 98.86, and that's where the market traded to for the two previous days and was rejected strongly from there. So we can see how these Fibonacci levels are very important, and that has held as very solid resistance for this market, and it seems as though we are going to have confirmation of that change of trend today based on those levels. Now if the market does continue trending down, as we're seeing this candle develop, we're now going to look at the potential extent of the current downtrend compared to the previous downtrend in a relationship to that previous first time frame downtrend. And we have the market testing at the 23.6% level at the moment, which is only a minor level, and it is looking fairly bearish at the moment, and there is a strong possibility that the market will test to the 38.2% level at 97.23. Below there we have the 50% level down there at 96.70, which would be the next level after there. In terms of the previous Fibonacci retracement, we're looking at that previous downswing. The market was in the upswing, and we saw the market for the previous day's trading find resistance at the 38.2% level, and today once again at the 38.2% level. So we can see how the Fibonacci retracement and the Fibonacci extensions have led us to find a good area where there was potential for a change of trend. The spinning top doji type candle interacting with that level has set the market up for this change of trend that we're seeing at the moment, and we have a very strong possibility of confirmation of this downtrend when this market has finalised trading tomorrow. Now, in terms of Ichimoku, the market is bearish in all three timeframes now. We have the market trading below the cloud, so bearish in the long-term time frame, also bearish in the medium-term time frame by trading below the Kijun Sen, and we have been trading below the Kijun Sen for quite some time. But for the close of the current trading period that's finalised, the market did maintain its bullishness in the short-term time frame by trading above the Tenkan Sen, but we are now at the moment, as the market is developing, trading below the Tenkan Sen, so that could be quite significant if we have that close below there. The Chikou span, as we're looking here, comparing to the corresponding price action, is trading below that area, so it's confirming the bearishness that we possibly will see in all three time frames. Just looking at the Kijun Sen, however, that is pointing flat. We've seen the market retrace back up towards the Kijun Sen, the flat Kijun Sen, and it is remaining flat at the moment, but obviously the barrier of this resistance at 98.59 and the Fibonacci ratios based on the Fibonacci retracements and the extensions has seen the buyers lose commitment and control of this market around that level, and we are now seeing this change of trend to the downside. And as I've mentioned, there is a possibility we could see the market trade to lower levels and trade down through the 97.50 level, down possibly to 96.62.